Good afternoon, everyone. Glad you could join us today. We are going to have a wonderful webinar. We're sure that you're going to enjoy it. My name is Catherine Baxter. I am going to be your host. I'm sorry, not your host. I'm your moderator for today's event. Your host is going to be Ron Good. And before I turn the console over to Ron so that he can tell you what to expect in our Bank Enterprise Award program today, let's look at a few housekeeping items. Please look at your screen for the administrative announcements. Adjust your volume on your computer so that you can hear this webinar. If you'd like to resize your slides, you can drag the bottom right corner to do that. From this website, please allow pop-ups. You'll note that there's an Ask a Question feature on the left-hand side of your console, and that's where you can ask our speakers questions. And what we'd like to get you to do is to ask questions throughout the webinar. Don't wait until the end. And also include the name of the presenter if you know it at the time. And of course, as always, in approximately 3 weeks, this webinar is going to be closed captioned for on-demand viewing in our learning management system. So, we have a poll question. We're going to open up our webinar today with a poll question, and then I'm going to turn it over to Ron Good. Here's a question. Come on, poll question. There it is. So, how many people are viewing this webinar from your location? Do you have one? Are you a loner? Is it 2 with you? 3, 4, 5, 6, 7, 8, 9, or have you hit the jackpot with 10 or more? Let us know. We're going to give you a few seconds for you to answer that question. Answer the question on your screen by clicking one of the radio buttons and hitting submit. And also, I want to remind all of our listeners that we have a survey that we'd like you to take at the end so you can tell us what you thought about the webinar and also give us some recommendations for future topics that you'd like to hear. Well, I guess everyone had an opportunity at this particular point. Let's see what everyone said. See what our poll question is. Okay, we've got a lot of loners out there, and some have 2. About 4% of you have 3. Oh, we have some with 5 or more. Let's see if anyone hit the jackpot. We actually have, you think they really have 10 or more? That's wonderful. That is fantastic. I am going to turn our console over to Ron Good, who is an instructional system specialist with CURE. Ron, you have the comm.
Thank you so much, Catherine, and thank you, everyone, for joining us, especially those 2 wonderful, or however many credit unions that have 10 or more people. That is very good. So I want to thank you for joining us for our Bank Enterprise Award Program webinar. And we have an awesome lineup of speakers joining us today to help us understand the program and how credit unions and banks can benefit from their participation. So first up, we have here with us at NCUA, Mia Stoll, who's the Associate Program Manager for Bank Enterprise Award Program. And we also have in the room with us Joshua Krantz, who's the Grant Administrator for CURE. So he'll be here to answer any questions we might have about CDFI. And then we have from remote 2 representatives from a credit union, from Hope Credit Union. We have Mary Bruce Alford, who is the Vice President of Investor Relations. And joining Mary is Ed Sivak, who is their Chief Policy and Communications Officer. We also have with us John Davies. He's a Compliance Executive of Regions Bank. Regions Bank partnered with Hope Credit Union to do some exciting and good things that we're going to hear about today. So thank you for joining us, and I want to thank our speakers. And now I'm going to turn it over to Mia to start us off. Mia, welcome to our webinar.
Thank you, Ron. Such a pleasure to be here. Good afternoon. So it's a pleasure to join NCUA for this presentation on banks and CDFI partnerships. Today I'll provide a brief overview of the CDFI Fund and then the BEA program. I'll touch on the following BEA topics, which you'll see on your screen here. Which are relevant to the activities that banks qualify for receiving BEA awards when they invest in and support CDFIs, including CDFI credit unions. So first, I'll describe what CDFI-related activities are and what is a CDFI partner as defined by our program. Then we'll discuss the criteria for what makes a certificate of deposit eligible for the BEA program, since it's an activity we see frequently between our bank applicants and CDFI credit unions. And then we'll talk about how to determine a BEA distressed community, which is good for both the bank and the CDFI partner to know, and also how a CDFI partner demonstrates integral involvement in a BEA distressed community. Lastly, I'll just provide a brief overview of CDFI certification. I have a colleague on the line that may be able to address any specific questions that you have, Andrew Schleck from the CDFI program. And we'll also provide you contact information for where you can go afterwards if you have follow-up questions. So the CDFI Fund plays an important role in generating economic growth and opportunity in some of our nation's most distressed communities. Our mission is to expand economic opportunity for underserved people and communities by supporting the growth and capacity of a national network of community development lenders, investors, and financial service providers. The CDFI Fund's vision is an America in which all people and communities have access to the investment capital and financial services they need to prosper. So the CDFI Funds achieves this purpose by investing in and supporting CDFIs through our various programs. Our programs listed here are the Bank Enterprise Award Program, which I'll cover in more detail today, the CDFI Bond Guarantee Program, the CDFI Program, and Native American CDFI Assistance Program, which consists of financial assistance and technical assistance, the New Markets Tax Credit Program, and the Capital Magnet Fund. So our program is a performance-based grant program, and it actually predates the CDFI Fund with the statute. The program provides awards to FDIC-insured depository institutions that demonstrate an increase in their investments to certified CDFIs and in their own lending, investing, and financial services provided to distressed communities. So while credit unions cannot apply directly for a BEA program award, they can certainly partner with banks to receive investments and or support from those banks. And so that is what the bank will ultimately use that will qualify them for an award. So there are three categories of qualified activities for BEA. The first is CDFI-related activities. The second is distressed community financing activities, which consist of consumer and commercial loans. And lastly, service activities that are provided to residents and businesses in distressed communities. So for our time together today, we're going to focus on the first category, which is CDFI-related activities. And it's also important to note that the BEA program awards, they're retrospective, and they're based on demonstrated increases in these qualified activities from one annual reporting period that we consider the baseline period to the next reporting period, which we consider the assessment period. So example, right now, our 2019 application is open, and banks will be submitting those applications actually next week. And so the activities that are included in those applications have occurred in 2018. So right now, this is calendar year 2019. There's still 6 months to go. The banks can now invest and support the CDFIs and use those activities when they apply next year, fiscal year 2020.
So one of the things you pointed out about, it's retrospective for the banks, but for the credit unions who get involved now, they can benefit now by engaging with the bank.
That's absolutely correct, Ron. So the CDFIs, the credit unions, they can receive those investments now in 2019, establish those partnerships, and then the bank will benefit from that investment from a monetary perspective the following year by receiving our award.
Very good. Thank you.
So, let's see. Okay, so the statute mandates that priority is given to applicants for supporting CDFIs. And as a result, the CDFI-related activities is always first to be considered for award. So that's something that definitely appeals to the banks. They know that if they make these investments in CDFIs, as long as they qualify and they provide all of the supporting documentation in their application, it will be awarded. The CDFI-related activities category consists of two subcategories. The first is the CDFI equity subcategory, but I did want to point out that that category does include grants. So that's the activity in that particular subcategory that is applicable to credit unions. So just wanted to point that out so that credit unions aren't thrown off by the equity subcategory. And then the second subcategory is CDFI support activities, which consists of deposits or shares, loans, and technical assistance. And so a portion of the investments or support is what is then eligible for a BEA award. CDFI that receives CDFI-related activities from an unaffiliated bank that's applying for a BEA program award is considered a CDFI partner. So we want to make that clear that the CDFI is the CDFI partner when they see that in our materials. And as we discussed, those activities that occur in 2019 will apply for the banks when they apply in 2020. And in addition, the CDFI partner, they must be certified as a CDFI at the time that the bank makes that investment or provides that support, and they must be integrally involved in one or more of the BEA distressed communities, and we'll touch on integral involvement in our next slide. Although there's a variety of activities that banks and CDFIs can partner on, we want to emphasize that the intent of encouraging banks to invest in and support CDFIs was to establish a true partnership. The partnership can and should benefit both parties, but this obviously requires communication about intents and goals over both short-term and long-term for both the bank and the credit union. And I think that it's great that we'll be able to hear today from a bank and a credit union to talk about their successful partnership.
And so the first step then, since the credit union has to be CDFI certified, that's the first step for a credit union then, is to seek that certification.
That's correct.
Right?
Yes.
And actually there's two processes for low-income designated credit unions. There's a streamlined process as well as the regular process, which is a little longer. And actually on our learning management service that Catherine talked about earlier, the place where you registered for this webinar, there's actually a course and a webinar. The webinar is called CDFI Certification, more than one way to get there. And there's also a course that will help you with that application process.
Great.
Thank you.
Sure, thank you. So as I mentioned earlier, the CDFI partners who receive the support activities must demonstrate that they're integrally involved in one or more BEA distressed communities. If the bank plans on making a deposit or a loan or providing technical assistance to that CDFI, and they're going to use that activity to apply for BEA, then that partner, that CDFI partner, needs to determine in advance if it meets our integral involvement test. You'll see a link below the second bullet in this slide, and you can feel free to check out the integral involvement form, which provides 4 criteria that you could select from to determine if your credit union meets that integral involvement test. And you can certainly follow up with the CDFI Fund if you have questions on that. One thing that we want to emphasize is that this is the only form or reporting that we require the CDFI to make. The requirement is for the bank to include a copy of that with their application. Afterwards, there's no reporting that the CDFI Fund requests from the CDFI. Okay. All right. So again, CDs are one of the activities that we see banks and CDFIs partner on frequently, and we think it probably serves as an introductory role to the partnership. If a bank places a CD with that CDFI partner that's a credit union, then the CD is required to be for a term of at least 3 years and provided at an interest rate that is materially below market. We consider materially below market rate to be the APR that doesn't exceed Treasury's rate, and that's based on the Treasury daily yield curve, which is available on their website. That's noted in the bottom hyperlink on this slide. And we think that the materially below market rate deposits can be like a win-win-win. So it's a win for the BEA applicant, a win for the CDFI, and a win for the residents and businesses that are located in those distressed communities. It's a win for the bank because a portion of that deposit qualifies for a BEA program award. So while they may not be receiving, market rate, they'll receive a monetary award from the Department of Treasury as a result of that investment. It's a win for the CDFI because since those CDs are placed at materially below market rates, it allows them to access the funds at a lower cost than they typically would incur from the market. And then the last and obvious is that it provides them an opportunity to serve those communities that are most in need.
That's right. So everybody wins.
Everybody wins.
That's right. That's what I like about the program.
Neat. Okay, so briefly we'll just discuss how one can determine a BEA distressed community. I do want to point out that a BEA distressed community, for those that are already CDFIs, they may be different than your CDFI target market or a new markets tax credit low income community or even your credit union's own service or assessment area. We consider these to be nationwide. They're based on census tracts that are at the most highest level of economic distress. So there's an economic requirement and a geographic requirement. The economic requirement essentially is that the census tract needs to reflect that 30% or more of the population is in poverty and 1.5 times the national unemployment rate. So these truly are like the most distressed, and of the CDFI funds, various census tracts for the programs, BEA has the most distressed. And then the geographic requirement will vary based on whether they're located in a metropolitan service area as opposed to a rural area. But we have a couple of tools for them to determine that. One is our CDFI Information Mapping System, or SIMS, and you can see the link there. We have instructions for BEA-related determinations that are pretty easy to follow, which include screenshots. And then there's also tabular information available if you already know the census tract number.
And I want to reiterate a point that you made about the strictness of the geographic requirement and also the economic one. That
Sure.
even if someone is a certified CDFI and they meet those requirements for target market, they still have to meet these because they're more stringent.
That
correct?
is absolutely correct. So they will need to determine, and I think Hope is going to talk a little bit more about this, but they will need to determine that a portion of the credit union's activities have occurred in one or more of these particular communities. Yes.
Thank you.
Sure. So the last slide speaks on CDFI certification, and that's the designation given by the CDFI Fund to specialized organizations that provide financial services in low-income communities and to people who lack access to financing. CDFIs are represented through a variety of institution types, including banks, credit unions, loan funds, and venture capital funds. So the CDFI Fund does conduct a monthly CDFI certification conference call, and those are intended to serve as forums for potential CDFI certification applicants. The hyperlink in the second bullet point there will point you to a list of dates and instructions on how you may register to attend one of those monthly calls, so that should be very helpful. And then also, for the majority of the programs at the CDFI Fund, certification is required But there are a couple of exceptions to that. One is for the BEA program. So if there are banks on the call who are not certified CDFIs, they can still apply for the BEA program. And as I mentioned, partnering with CDFIs is the activity that is awarded first.
Right.
And then the technical assistance also provides grants up to $125,000 for capacity building activities in order to achieve CDFI certification, and that's available to emerging, certifiable, and certified CDFIs. So this concludes my portion of the webinar. The last slide is providing our contact information for the CDFI Fund, the BEA program, and the certification team.
Thank you very much.
All right.
Nia, that
Thank
was very helpful, and I'm sure our credit unions and banks listening got a lot out of that and understand the program probably fairly well. So now we're going to go to our good friends at Hope Credit Union. I'm going to turn the webinar over to Mary Bruce Alford and Ed Sivak. Welcome again to our webinar.
Thank you, Ron. We are very glad to be here. I appreciate the opportunity to be a part of this webinar with some of our credit union and bank partners, of course, the CDFI Fund and the National Credit Union Administration. We're here today just to share our experience with the BEA award program and with working with Regions Bank in particular to create opportunities to expand access to financial services for low-income and low-wealth people living in the Mississippi Delta. Before I dig into that, I just wanted to give a little bit of background about Hope. We are a CDFI, we are a minority depository and low-income designated credit union. 8 out of 10 members are people of color, and about a third of our members are unbanked when they join the credit union. For our members, our core lines of business include our retail services that encompasses deposit accounts and consumer loans, and we also are able to make mortgages and small business loans to our members. But to get back to the BEA program, about 4 or 5 years ago, Hope received a call from Regions Bank to gauge our interest in acquiring branches in the Mississippi Delta. The opportunity was certainly intriguing because we did not have a retail presence in the central Mississippi Delta. We gave the opportunity a code name, Delta Dawn, after a country music song by Tanya Tucker, and then we set off to evaluate that opportunity. I'll transition to the next slide to describe the details of this opportunity. It is important to share a few things about Itta Bena and Morehead, Mississippi, which is where the Regions branches were located. Both are majority Black towns located in the heart of the Mississippi Delta. You'll see on our map here, the 2 green dots represent where our branches are located. Both are very small towns with fewer than 2,500 people in them, and both are extremely poor towns with no other financial depository or any other financial institution for that matter, payday lender, check casher, or otherwise. So this journey began, as I mentioned, with a phone call from Regions. I believe John Davies is on the presentation with us from Regions, and John probably better than anyone else could recount the origin of the partnership. But I would say that this partnership actually started years earlier. Regions Bank has been a longtime supporter of Hope. In fact, about a third of our physical branches were donations from Regions Bank. So the relationship was strong well before this transaction was even considered. So with that call, we began to evaluate the opportunity. From all outward appearances, the physical branches created a lot of excitement and buzz. One was the nicest building in town, the former Bank of Morehead, and the branch in Itta Bena was also in really good condition. And so the prospect of opening retail locations in the Delta, which is actually the birthplace of our sponsor organization, Hope Enterprise Corporation, was particularly attractive. We knew, though, that there would be startup costs to establish a retail presence, but again, with that strong partnership or relationship in place with Regions, we opened the doors to their branches. They opened their doors to their branches and allowed us to do marketing our services to customers in the branch. They invested $500,000 in startup costs, so $250,000 for each branch. And so to be clear, the bank, number one, supported our marketing efforts in the branch and via a mail out to existing customers. Two, they donated the physical facility. And then three, they provided the startup capital for our Delta retail operations. Finally, they approached the transaction as a true partner. They literally closed the branch on a Friday. There was a bank holiday on a Monday, and we opened the branch as Hope Credit Union on Tuesday. To the community, there was never an interruption in banking services. And so we're here today. We thought about showing a picture of the building. They are beautiful, but what is happening inside the building is really about who we are. This is a picture of two of our Moorhead members that span generations. A grandmother teaching her granddaughter how to save and bank inside the facility we have in Moorhead that was donated to us by Regions. So with that, I'm going to actually transition. Ed is going to talk some more about why this partnership was a win for us, a win for Regions, and also the communities that we both serve.
Thank you, Mary Bruce. Again, thank you for joining the webinar today. As I mentioned, as Mary Bruce mentioned earlier, this really started with strong relationships. For organizations like the other credit unions on the call, minority depositories, low-income designated credit unions, CDFIs, we have an opportunity to take advantage of the fact that we really, in many ways, complement the services that banks provide, by reaching to a part of the market that the bank may not be able to reach. And in fact, there's a number of programs. The Bank Enterprise Award Program is one, Community Reinvestment Act is another one, that create incentives to build relationships to more fully serve a larger swath of the market with affordable and responsible financial services. So obviously, in the instance of the example we're sharing today, there was alignment around the Bank Enterprise Award. But there was also alignment around the Community Reinvestment Act. So what you'll see in front of you is a slide with two maps. These come from the Federal Reserve Bank of Atlanta. They created a really useful tool that maps assessment areas for the Community Reinvestment Act for the 20 largest banks in the Southeast. What you see on the left is a really typical of most banks, most large banks in the Southeast. They don't really have assessment area in the Mississippi Delta. What you see on the right is the assessment area for Regions Bank. It includes a lot of the Deep South, including the Mississippi Delta. So an investment like the one we're describing certainly had CRA alignment. I share this resources for a couple of reasons. First, I believe firmly that this relationship has been catalyzed by both the desire for impact, by a desire from people on both sides of the partnership to improve the quality of life. And there was an alignment of incentives. Hope obviously has an incentive as a mission-based institution to serve more people, to improve the quality of life and the access to financial services in communities throughout the Deep South. This means we need to have branches where there are no other branches of any financial institutions. It means we need to offer products and services that no one else is offering. And of course, we need to do this in a way, given that this webinar is hosted by NCUA, that appropriately manages risk. And it needs to often result in the fruition of the vision. For Regions, the CRA and the Bank Enterprise programs created an incentive to consider this transaction. Of course, I think there were other reasons as well. Their track record obviously demonstrates this. But the resources made available by these tools don't hurt, and I think they also offer a roadmap and a resource that can be leveraged when mining other opportunities to support credit union growth. Second, I really, along those lines, think this map becomes an opportunity atlas of sort. We should all look at the communities where we're located. Are there empty branches or ones that may not be fully staffed before too long? Are they in CRA assessment areas? If they are, then that presents an opportunity to engage a bank and start beginning the relationship, particularly when you combine it with this Bank Enterprise Award. Now, undoubtedly, there's going to be questions about what's needed for the credit union, from the credit union to make this happen. And it's not terribly difficult. A lot of the work actually comes down on the bank making the investment. But for credit unions, first, this was mentioned earlier, you've got to be a certified CDFI. So 60% of your activity has to occur in places that meet the CDFI criteria. So for us, it's at least 60% of our lending must occur in investment areas where these are census tracts where the poverty rates are above 20%. The median family income are below 80% of the median family income, or meeting certain unemployment benchmarks. Second, you need to create a statement of integral involvement for one or more of the distressed communities. And to do this, you just got to be able to show that at least 10% of the number of financial transactions or the dollar were transacted in one or more of these distressed communities in each of the 3 calendar years preceding the date of the investment. Another way is if 25% by number or by dollar of transactions occurred in one of these distressed communities or multiple communities in one of 3 years leading up to the transaction. There are a couple of others that revolve around market share or where physical facilities are located. But typically when we qualify for these or work with our bank partners to qualify for these awards, it's around our statement of integral involvement meets one of the first 2 criteria. And so that, again, how do you do this? CDFI Fund has a mapping tool. Again, BEA communities, these distressed communities need to meet certain economic distress requirements around population and geography. Again, there's a mapping app that facilitates this process. There's also folks on the fund, from the fund on the call who may actually be best positioned to answer specific questions here. And again, I just would reiterate, it's not a big burden to do it, especially when you weigh it against the benefits of the investment. So if we go to the next slide, I'd just like to end and reemphasize the point made earlier. We're all working along a financial service continuum. On the left side of this chart, mobility for people is low. And oftentimes when mobility is low, the social service sector steps in to meet basic needs. But as we move right along this continuum, we see more opportunity for institutions like ours and then institutions like the banks to meet the financial service needs of people and communities. You also see some predatory options as well. I think it's on all of us to be a better alternative, not just from a product standpoint, but in terms of just from a systemic standpoint to meeting the needs of local people. We can build partnerships with banks to leverage investments through the programs like the Bank Enterprise Award to more deeply serve our members, to serve more members. And so I look forward to the question and answers so that we can dig into how we can make that happen. Thanks again for the opportunity to share this information today.
Very good. Thank you, Mary Bruce and Ed. And I also want to thank you for reminding me of my favorite country western song, Delta Dong. I probably will not be able to get it out of my head for the rest of the day, but that's okay. It was one of my favorites, and I understand why your credit union lives up to its name, Hope, because your story brings a lot of hope to the communities you serve, and I think you're doing a very good job. So thank you again for sharing and all the work that you're doing. And so now we're going to get the bank's perspective. So I'd like to welcome to the program John Davies from Regions Bank, who partnered with Hope Credit Union.
Yeah, thanks, everyone. And I'll say I'm going to have a hard time improving on what Mary Bruce and Ed said. That was a really good description of our partnership. But, I'll try to share a little bit about, from our perspective, how we view this. We have had a deep relationship, as has already been said, with Hope for a number of years in a lot of different ways. We had actually donated branches. It preceded my involvement with this in some of our larger markets over the years. But several years ago, part of my role in the bank, being responsible for CRA compliance, is to evaluate decisions related to our branch network. And so, as with all financial institutions, we are looking at the efficiency of our branch network, where we can consolidate where it makes sense to, to shrink that network a little bit and where to grow it. And so, Regions being like most large regional banks, a conglomeration of different banks that have merged over the years, we found ourselves with, a large footprint, if you will, in rural geographies, particularly in Mississippi, obviously across the Black Belt of Alabama, through Appalachia. That is our footprint. We have a 15-state footprint, and those areas are all clearly in there. And so, we had several branches where, they're located in small towns that, honestly, are difficult in terms of our ability to serve the true needs in those communities. The members of those communities really needed a different product set than what we had to offer. In a lot of these markets, though, and again, I'm the CRA guy, so in a lot of these markets, we looked across the market and realized, we're the only financial institution there, and so we made a commitment that we would not leave that market without a bank or without a financial institution. So, looking at other ways to tackle this, I reached out to Hope and said, we've had this long-standing partnership. We've got several branches in the Delta of Mississippi that if we could partner with, we'd be more than happy to let you guys run these as Hope branches instead of Regions branches. And so as they said about vetting that and came back with interest in some of those markets. I think what made this unique, though, is the way we did this, where from a customer perspective, if you lived in one of those markets, we didn't want them to go some period of time without bank services. But being a small market, and we did this 4 times, but in 2 sets of 2, a true divestiture is it would be difficult to do on that small of scale for us. I think it would also be more difficult for Hope. And so we, again, trying to get creative, we came up with a way to where, Hope could come in ahead of time before we closed in our 90-day period in which we had announced the closure, and basically allow our clients to open up Hope accounts so that, on the very next opening day after we closed and the bank opened as Hope, they would have the ability to, to conduct their banking services locally. So required a tremendous amount of cooperation, but I think it went very, very well. I would say to the credit unions on the call, if you're looking at similar partnerships, these can take a lot of different avenues, and with Hope, it has taken a lot of different avenues. So, this was one area where we came to them and said, we can create a win-win-win for us, for you guys, and for the communities there. But there have also been situations where, Hope has come to us and said, we're looking to expand in this market. Do you have anything? That's helpful information for me to have. The answer is not always yes right then, but, over time, as potential decisions are made, that becomes, one of the factors. Is, okay, there is a branch in this market. We have some overlap, some duplication. We can close it, provided we donate the facility to a community development credit union, or in Hope in this case. We've also had situations where Hope has come to us, and where we have already closed branches and said, hey, this is a market or a branch that we think we can operate. Would you be willing to donate it? So these partnerships can come at you from a lot of different ways. But from the bank's perspective, there are a lot of benefits to doing this. Obviously, there is a CRA benefit. Ed put our CRA footprint, our assessment area footprint on the, showed you that graphic. We have 150 assessment areas. A good portion of those are rural. So any CRA activity within those areas is something that is very attractive to the bank. But in these cases, with these branch donations, it really even went beyond that. We got CRA benefit for the value of the buildings, but it's also, a little bit unique and creative, and I think that carries a little bit more weight. It also allowed us, quite frankly, to exit markets that, again, are difficult for a regional bank and their product set, to really serve that market in the way it needs to be served. Whereas, the credit union's product set is a better fit. I think also Hope brings, the ability to do things that we can't do from the the non-credit union side of their organization, and there's several examples of that. From a BEA perspective, we've applied for BEA awards for a number of years. I will say that every time we've made application, we've received the award. So it is a program that I would encourage banks to participate in. And when we looked at these, the fair market value of the buildings became, in-kind contributions for CDFI. So that was one of the criteria that, we used to get an award in those years. The beauty of BEA for us is, it allows us, we leverage that to really increase our support of CDFI. So if we get an award, we put it back we donate it back to our CDFI partners, to further, I guess, leverage, our resources to benefit the CDFI. So, that's sort of, I guess, what's in it for us. Again, I would encourage everyone, if you are interested in using this expansion strategy of donated facilities, to Ed's point, look around at the overlap, see markets that you're interested in, what banks are there. What we find too, it's interesting, we're still in a lot of very small communities, but in many of them, we're not the only bank. But if when we look at those markets, if we're there and there's a community bank there, they have the vast majority of the market share. So it's clear that in a lot of these communities, they want to bank with the local, the small local institutions. So I think it's very beneficial, for organizations for credit unions to be in those markets. So I would reach out. If you have bank partners, reach out and ask them. If there is a market you're interested in and they're there, whether they've if they've closed a branch and it's sitting there, you can, that's easy. But if if it's not, I would reach out and ask anyway. I mean, I think that as you build partnerships with banks, those, be open with those conversations. I mean, it's, I've had many conversations with Hope about this type of thing. Some things they've requested we haven't been able to do. Some things we've asked them to do, they haven't been able to do. But when we all come together and it benefits them, it benefits us, benefits the customer base, benefits the community. It's a beautiful thing. So those are my comments. I'll be happy to answer any questions that come up in the Q&A.
Thank you so much, John, and thank you for sharing your side of the story and also that great advice you gave to credit unions about looking for banks that they can partner with. I think there's a very good point. Before we go to Q&A, I'd like to go back to something that Mary Bruce said about the branch donation. It created a lot of buzz and excitement, and it occurs to me that probably, as an indirect benefit of partnering for both institutions, it probably gave you an opportunity for publicity you didn't expect, and probably, or notoriety perhaps, whichever, but it probably had an impact on your institutions just indirectly from that buzz, like you said. Would you agree with me, John, and then also Mary Bruce and Ed? Whichever one of you want. Yes, go ahead. Yeah,
I would absolutely agree, and it's Hope has been a great partner to us in sharing this story over the years as well, because this is something that, again, from a CRA perspective, we think is a real win. But they've been a really good partner. Because of the buzz you're talking about, it's more on their end. They have a better opportunity, I think, to tell the story, and they have been a really good partner in sharing that.
Thank you, John. Mary Bruce and Ed?
Sure, so I'll just speak. I think, yes, there certainly was a lot of buzz created at the time. And as we were starting to, enter in the branch, we surveyed the community to try to find out what were the needs that they had and how Hope might be able to respond to provide the products and services that John identified, that were needed in this community. And so one of the things that came up immediately was just the need for an ATM. And so Hope was able to immediately respond to that need. And so that was certainly something that the community was very excited about.
Very good.
Yeah, like any rural community, you can't keep a secret for very long. And, one of the, I think, exciting things about, opening up in Inabina, Moorhead, and then Drew and Shaw, which are a couple other places that was supported by regions, is, you just had people come to access products and services that weren't there before. We had one gentleman who literally walked 2 miles to the branch in Moorhead to apply for a loan to get the funds needed to fix his truck. His truck had been out of commission for a while, and he was able to access the funds needed, which was there to help him get back on track with employment and then just some other needs that he had. Again, word had spread, and that's just one example. But I can also think of just the pride in the community as well, just being able to keep that facility active. I can remember there was another woman who came in, and she's very proud of the fact that she was the first one to open an account in Moorhead at Hope Credit Union because her family had been banking there for a long time. And so, again, I think it both gave us an opportunity to share our story, but also, to reaffirm the dignity of place, which is so important in every rural community across America.
Thank you. Those kinds of stories that you just shared that reminds me of how important the work that we do is. So, thank you very much. So it's now time for our Q&A. And again, if you have a question, as Catherine mentioned, please text it to us, and don't forget to let us know which speaker it is addressed to. And Catherine, do we have any questions?
We have quite a few questions. In fact, we're going to start with Mia. She looks like she's dying to answer some questions. So Mia, we had someone address you.
Okay.
So they said, how would a credit union start to find a bank to partner with?
All right, so I guess in addition to what was shared earlier in terms of checking out to see what banks may be located in their assessment areas, they can also look on our CDFI Fund website to get a list of the banks who have recently received awards. We actually have what we call a searchable awards database, and they can search by both the Bank Enterprise Award Program, and if they are interested specifically in identifying CDFI banks, then they can also look at our list of certified CDFIs, and that they will be able to filter them based on the organization type and find it for banks.
Okay, great. Before I ask you this, so we had a couple of questions along those lines. Okay. So you say all they need to do is to go to...
Yes, it's www.cdfifund.gov, and that'll be in the last slide for the BEA program. You'll see a couple of links in the menu. You can click under either certification and find it, or the searchable awards database.
Fantastic. I'm going to give you another question.
Okay.
Okay, you ready?
Sure.
So here's a credit union wants to know how much is the CD investment from the bank to the CDFI? Are there limits to those investments?
The dollar amount is discretionary based on what the bank is willing to offer. The limit, I believe, is $1 million, but I can follow up on that. The bank ultimately will receive, depending on if they're certified CDFI or not, they'll receive 18% of that investment back through the BEA award if they are a certified CDFI bank. If they're not a certified CDFI bank, they'll receive 6% back of that.
Okay. So now I'm gonna take Mia out of the hot seat, and let's put Mary and Ed in the hot seat.
Okay.
There's a couple of questions. So George is going to ask the question.
Mary and Ed, this question is for you. Who would you recommend contacting at a bank to find out if they are interested in donating a branch?
So I would recommend contacting the bank's CRA officer. So a similar person to John's role at the bank is who would, I think, be a great first contact.
And oftentimes in different markets, John has a team of CRA officers too, all throughout the region. And so, particularly if you're in an urban area, there'll typically be a CRA person there. If they're in a rural area, there's someone who's responsible for conducting outreach in those areas. And those are the relationships that I think are critical to build, to pursue strategies like this and others.
Okay.
All right. Thank you. John, I think this is for you. The question is, which resources were you able to use to gather information to make sure you were qualified?
Well, for the BEA award, is that where the question is coming from?
Yes.
Yeah.
They didn't state, but I think it is.
Okay. I have someone on my team that has done this for us for a number of years, and she's very detail oriented. Thank goodness, because I'm not. And but she handles the application process. She handles gathering the information. We have to show that our support of CDFI is actually increased from one year to the other, and it's on that increased amount that we apply for an award. So, in order to get an award every year, we have to continue to improve and increase our support of CDFIs. And so she maintains all of that information for us, as well as the record keeping after the fact, where, we have to make sure that, we provide those funds back to qualified CDFIs.
Okay.
Thank you, John.
So now, before we ask the next question, we do want to have everyone do our survey. It's not very long. There's a widget at the bottom of your screen that looks like a piece of paper in it. And so if you click on that, the survey will come up. We really need your feedback. We're going to get to as many questions as we can, but we are going to conclude at 3. So since Josh was sitting there with nothing to do,
The next question is for Josh.
The next question is for Josh. I'm sure Josh is just excited about that.
Josh, a credit union wants to know how to go about applying for these grants.
So, as we mentioned, as Mia mentioned earlier, CDFI certification would go one of 2 ways. The traditional way is through the CDFI Fund directly through their website, which I'm sure they can give you much more information than I can. But the NCUA offers help on a streamlined certification for qualified credit unions. So what you would do is, if you're a low-income designated credit union, you would apply for the streamlined certification qualification application. I believe that's the fancy name for it, through CyberGrants. So you create an account in CyberGrants. And we do have on our website, on the NCUA's website, a really great guidance document for it. But essentially what you'd be sending us is information related to your recent loan portfolio. We would analyze that to see whether or not you'd qualify, you would have a qualifying target market. And if you do qualify, that would then allow you to apply for the CDFI Fund streamline application. So as I said, I would recommend you check our website. I'm trying to think. I don't know the URL, but if you do have any questions, you can contact Cure CDFI at ncua.gov. And if you go to CURE, which is the Office of Credit Union Resources and Expansion, you'll find information on CDFI certification there, as well as the guidance that I just mentioned.
Absolutely. So now let's ask that same question to Mia, because I also think the credit union was trying to find out about the grants through the CDFI Fund.
Sure. So we have a help desk that's also noted on the last slide, which is area code 202-653-0300. And from there, you'll be able to select prompts for our various programs at the CDFI Fund.
And to answer another, thank you, Mia, so much. And to answer another question that we had from credit unions, not credit unions, our audience, are the slides available for printout? Yes, they are. They're in another widget at the bottom of your screen, and it should say something like either resources or slides.
Yeah.
And so you can print out the slides that way. I did want to proffer a question for credit unions to consider, and that is, here's a question for credit unions to consider. Has your credit union been contacted by banks interested in placing a deposit? Now, and these are banks with whom you do not have an existing relationship. If your answer is yes, would you be able to talk about any benefits that ultimately resulted from the initial transaction and how it may have helped to lead to an additional partnership activities with the bank? If this has been your experience, please send us your experience at CURE, that's CURELMS, all one word, at ncua.gov. We'd like to share it with the CDFI Fund.
That'd be great.
Okay. All righty. We have time for one more question.
All right. That
got
last
it?
question
Yes.
goes to Mia. What is the time frame for a low-income designated credit union to become CDFI certified if going through the streamlined process?
That's Josh.
Oh, Josh.
Right. So we have several periods throughout the year in which credit unions can apply to see if they're qualified for the streamlined certification. So our next one will begin on Sunday, September 15th, 2019. And the intake period will begin at 9 a.m. on that day, and it'll run through Saturday, October 5th, 2019, and the application for that will close at 11:59 p.m. Eastern Time. So again, go through your Cybergrants portal to apply during that time, and it'll take us a few weeks to analyze the data, and we'll let you know at that point.
Okay, wonderful. Well, we are fresh out of time. We hope everyone enjoyed our webinar, and we hope you filled out our survey in the widget. Please fill out the survey. Thank you so much. We'd like to thank Ron for being our host, Mia for being our hostess, Josh for volunteering himself at the last minute. We'd also like to thank Mary Bruce and Ed Seaback, thank you, and John Davies for their wonderful experiences. Please join us again in August for our next webinar, and October for our upcoming webinars. Watch ncua.gov so that you can find out what the title of those webinars are. The one in October should be with the SBA, but we'll keep you posted on everything. Thank you so much for joining us. We thank Franz, who's our behind-the-scenes guy, and George, who was helping out with the Q&A, and Christine, that was watching us do all of it. And we also want to wish Franz the best. He's going to be a new daddy anytime now, he and his wife. So thank you so much. We hope to see you all in August. Have a wonderful afternoon and a great week.